Hello world, welcome back to our channel. I'm your host Tommy, and every week we make videos about personal finance, investment strategies, and everything in between. If you'd like to get updates in written form, check out our newsletter where we share updates on our portfolio, market trends, as well as investment ideas on our horizon. On today's episode of the Bottomline Interview Series, my guest is a finance vlogger, an avid investor of high-tech growth stocks, as well as one of the biggest Tesla advocates on YouTube. Daren, welcome to the show.
Thank you for having me, Tommy.
It's so good to see you. It's nice to be out. We've not had at least I've not had chance to film YouTube in the real world actually for the longest time. So I'm happy to have you here.
Tommy's first outdoor episode.
Let's start off with some questions about your investment journey. So maybe tell us about your investment journey. How has it been since, let's say, 5 years ago, and how does it compare to it now?
I've only started investing 2 years ago. I started investing very late. So I first bought my first stock in August 2020. So you can say I'm practically a newbie investor. Very new to this. Procrastinated for many years. Because of COVID, many lives have changed. I decided to invest. No more reasons to hold.
Wow, that's as good a reason as any, I suppose. I personally am late to investing as well. I believe 2 years before COVID was the first time I bought my first stock, and it was on the SGX. It didn't do well, but it got me interested enough to continue diving deeper into companies, trying to understand what makes a company worth more than another. And that's what my experience has been. Happy to hear that I'm not alone being late in the game, and being late is better than being and not being invested at all, I would say.
Agreed.
So recently, I see that you have made a trip down to the Gigafactory, right, for Tesla. How was that trip, and can you tell us about what you've observed, any interesting things you've seen?
So 2 weeks ago, I made a 9-day trip to the US. And what I did there was to spend 4 days in LA, 5 days in Texas. One of the reasons, not the only, but one of the reasons was to see and visit the new Tesla Gigafactory in Austin, Texas. Tesla just moved the headquarters from California to Texas. It's not just good for taxation, lower taxation compared to California state, but also easier to attract talent. Housing costs are lower as well. So Austin is booming, is growing a lot. It is the fastest growing city in the United States right now. And there are a lot of tech companies in Austin, not just Tesla. So I made a trip to meet Tesla owners, to try out all the different models of Tesla, because in Singapore, we only have officially the Model 3, one model, the sedan. And to meet the Tesla community, not just owners, but also other investors, like Dave Lee, who's been covering Tesla for 10 years.
Nice. Okay. I see that your channel is unique in the sense that not only are you an investor of Tesla and a user of Tesla, you interview people who work there and try to get as much information as you can. What can you speak to in terms of having that as an investment mindset versus, say, someone who looks at charts and tries to find good valuation and just buy a company at a straightforward price? How do you think that compares?
The charts, the annual reports, they show you the numbers. When you talk to people, when you're in there in the factories, you see the story behind the numbers. If you don't know the story, sometimes it's hard to tell where the numbers are going to move.
Right.
And for me as an investor, I don't just invest to make money. That's one of the objectives, but I invest in things I believe in, things that resonate with my values. I'm not looking for the highest possible returns on investment. I'm looking to beat inflation. But I want my investments to make a difference in the world, no matter how small they may be.
Right. That's great. How do you think the competition and valuation for Tesla looks like moving forward? Let's say, looking forward 5 years, do you think more competition coming from Europe and Asia is going to be a threat to their bottom line? Do you think valuations are still considered lofty at the moment?
So in the traditional economics or finance way, you think that in every market, everything will have equilibrium. There'll be competition if someone's making too much money, and everything will be commoditized over time. Sometimes there are exceptions. You take Apple. The competition's been coming for iPhone for more than a decade. Apple still has about 70% of the industry's profits. 70%.
Right.
If you execute well, you've got a strong ecosystem, you've got good talent, you can maintain a long-term competitive edge. So to me, for Tesla, within the industry, the strongest competition, as you hear many times, are the Chinese EV companies. They're hungry, they want to succeed, they have a huge domestic market with a government who wants both machine learning and EVs as strategic country priorities. They're not messing around with this. China is going to be one of the world's top EV and also machine learning and AI countries. So, to me, that's the main potential competition, the Chinese EV companies. To me, the biggest challenge to Tesla is not within the industry. I've said a few times that it is China. Because China right now controls 80% of the world's battery supplies. And if you want to grow as a company, if Tesla wants to grow 50% year on year, you need raw materials for batteries.
Right.
The world is supply constrained with chips and batteries. You can't do it without China. And China could easily say, I want Xiaomi and XPeng to succeed. We prioritize raw materials to them first.
Right.
And that's, to me, that's the biggest challenge, not the industry. And why is it not the industry? Because Tesla isn't just number one in EVs right now. That's static position. But if you look at their velocity, how much they're changing, how quickly they're changing, this is a company can make 8 changes to the production line in a week. Very few other companies do that. Even Toyota at its prime with its Kaizen doesn't make changes as much as possible. They've been so late on EVs despite being the first to hybrids. Prius caught the world's attention to hybrid.
Right.
But then they held on. They didn't want to do EVs until this year when they launched their first full EV in a long time. This new SUV EV. So I think Tesla is moving very, very quickly. The pace of change is far ahead of anyone else in the competition. On top of that, Tesla's kind of like Apple many years ago, right? You thought of Apple as a computer company, then a music player company, then a phone company, services company, on and on. Tesla's moving that direction as well.
Right.
So those who follow Tesla, if you see Dave Lee's chart on just all the big S-curves, right now, we're riding the S-curve of EVs. Next, it'll be robotaxis, robotics, AI over time. Not all of it may play out. Tesla Energy, for instance, people thought it's going to grow as fast, if not faster than the automotive business. It hasn't yet. There's different challenges that slow it down.
I agree with your point where the ability for Tesla to be agile in terms of what they can do in their production chain can give them a economic advantage, competitive advantage, if you will. However, I would say that with something like an Apple, right, the transition from, say, a computer company to cloud services to music and such, they are all a lot closer in terms of the synergies they can get between each business unit. So let's say you are already running your own cloud business. It's not difficult to extend your product line to also offer other services on top, like Apple, like use your same cloud services to, say, run your Apple Music services. So to me, that's more of an obvious play, similar to Alphabet actually. Whereas with Tesla, right, for me, what I see is they own most of the current production chain, but they don't own the supply side, right? So they cannot control how the materials flow down. Let's say nickel, lithium, and they have many other metals involved in their EV battery system. So for me, it's kind of like an existential risk in the sense that if they cannot figure out how to control that supply, they won't be able to produce EVs the speed that they want. I think the target was in the millions, right, by 2030. So per year. So the number of EVs to be produced has to be in the millions. To do that, you need a lot of material. But it's not clear for me how they can get a path to controlling that supply side. So what are your thoughts on that?
Okay, so let's do a little bit of perspective expansion here. Tesla is one of the world's largest manufacturers of batteries. And half of all the batteries that they manufacture now are LFP. And they're trying to diversify their battery raw material supply chain. Canada has a lot of different raw materials that can be used for batteries. And Canada is a much more friendly country to the US compared to other parts of the world. Or if you mine cobalt in South African countries, child labor, a lot of different ethical risks over there. So Tesla recently has also put up jobs for geologists. They are going to get the raw materials as well. And while they do not own most of the raw materials right now, if you do the research, you'll see that they've signed the most long-term contracts for battery materials. Probably 5 to 10x more than any other car company in the world. And they did it way before COVID. Because at the beginning of COVID, most car companies, what did they do? Tell suppliers, sorry, I'm cutting production, I'm producing less. Right. So if you are a battery supplier, you're a raw material supplier, and Tesla is saying, I will take everything you have. Right. Who are you going to prioritize? You're going to prioritize Tesla, your biggest customer.
I see.
And your customer who signed 5 10-year contracts with you to grow. People also know that Elon has a range of different businesses. He does a lot of sci-fi things and make things come true. Reusable rockets, you told someone 6 years ago, they'll freaking laugh at you. Right now, people don't even watch live streams because it's so common. An adjacent company like Starlink is so successful because they own the means of transportation. So we see a war in Ukraine right now.
Mm-hmm.
There's a saying, amateurs talk tactics, experts talk logistics. And in a world that's expanding, one of the most powerful form of logistics is rockets. Because right now we're thinking of the resources in this planet. What if you can mine asteroids, comets, the moon, Mars?
Right.
How much more can you produce then? So that's something that's not going to happen now, 1 or 2 years' time. But you extrapolate 5 to 10 years from now.
Right.
Because Tesla's not going to disappear in 5 years' time, right?
Right.
It's like how, no matter what, if Apple screws up massively, they'll still be around for 5 years. It's not going to suddenly disappear.
Right.
So take the same way. Like even if Elon leaves Tesla today, the company is going to be around. So their ability to massively expand their raw material supply chain is very significant. And a lot of people don't see that yet. And for Tesla investors, we're very thankful that a lot of people don't see that yet. Keep the price low for now. If you see Tesla stock price history over a 10, 12-year period, there are years where nothing happens, even though quarterly earnings are amazing. It's just flat,
Right.
2013 to 2018.
Right.
Then 2020, 7x growth.
Yeah.
And around 2012 to 2013, when Dave Lee first entered, another 5 to 10x growth. So Tesla investors will keep on accumulating until the years where suddenly a flip switches and suddenly it goes up.
Right.
And if you do look at the average annual return so far on Tesla since IPO, it's about 65% per year.
Right.
Annual growth rate. So with Tesla, a lot of people who analyze the company, they are industry analysts. Like you're an auto industry analyst analyzing Tesla. It's traditionally good, but the problem with that is Tesla doesn't just want to be an auto company. They changed away from Tesla Motors to Tesla, I think about 6 years back. Those who truly follow Tesla, like you listen to AI Day, Battery Day, Autonomy Day, Elon says that all these cars on the road, there are about 2 million Teslas on the road right now. By middle of this year, 3 million. These cars, because of their autopilot, limited full self-driving, it's like a level 2.5 autonomy. It's not far from level 5 for now. Elon sees them as robots on wheels. If you can make robots on wheels, they're traveling 60 miles per hour. Is it a big leap to make robots on legs traveling 5 miles per hour?
Right.
If you frame it that way, making the robot is easier than making the car.
Yes.
The raw materials needed to make the robot is less. And the safety thresholds, a car that's going 60 miles per hour, you can't fool around with it.
Yeah.
A robot in a Tesla factory going at 5 miles per hour that you run in a B2B environment, in a very controlled environment with no civilians, and they don't have to be perfect in the beginning. They can ramp up like a RPG character, right?
Yeah.
Level 1 loop, grow all the way up to a level 100 hero.
Right.
So robots are not far off. Tesla already has 2 million robots on wheels right now.
Right.
Very simple robots, but people call a Roomba a robot as well.
Yeah.
The definition of robot is not just those like scientific Terminator.
Yeah.
Even basic things are robots.
Yeah.
Then you look at all the future adjacent business, AI. So Elon has said multiple times to solve for autonomy, full self-driving, they need to basically solve computer vision.
Yeah.
To solve computer vision, to solve an understanding of the world.
Yeah.
It is very easy to read road lines and road signs, but it's very hard to understand that if you see a ball coming the road, you should stop because very likely a child is coming soon. A ball doesn't come alone without a child.
Right.
And an understanding of the world, if you bring that from a full self-driving technology in a car to a Tesla bot, to a drone, to AI as a service. It's kind of like the story of Amazon, right? What does selling books have to do with cloud technology? They first built their own in-house solution and then they saw that other people valued it as well.
Yeah. So Tesla, first of all, you can say that you're buying into a moonshot possibility, let's say 5 to 10 years out, as well as the ability for them to disrupt the logistics industry in many ways. Like you said, a robot on legs is a lot simpler than a robot on wheels. So possibly a regulation will be a lot simpler in that sense versus a very established business, like established sector like the automotive industry. And I agree with what you said. The ability for using one machine learning model, one AI system to spawn off new products it's actually a very powerful play because the unit economics is probably very small, very favorable for Tesla in that sense. They can deploy similar models to do similar things, but with a different network, right? Let's say you have, like you said, drones and on the ground as well, not just the roads. As a data engineer myself, I'm cognizant of the power of data and what they can do with it. However, I'm not sure how do I translate that into earnings potential. I think that's the part that a lot of like people who want to invest in Tesla struggle with. So can you share your thoughts on like how can we bridge the gap between the two? Here are all the qualitative features and the amazing things that Tesla is potentially capable of, but how do we translate that into valuation or intrinsic value, if you will?
This is precisely why we research our investments. This is precisely why we do that. Most people, they will see the wall. Great investors see beyond the curve. You peek behind the wall and see what's next. That's why we do this kind of research. That's why we're here. And not just buy an ETF and that's it. You don't want to do research, buy an ETF. S&P 500 has been kind to most people in the long term. Annual returns of, it's definitely inflation beating. Now, how this translates is, if you just take what institutional investors look at, just the car business, if you think Tesla purely is a car company, the margins today, not tomorrow, today, are already industry leading today. Toyota and Volkswagen need to sell 5 to 7 times more cars than Tesla to make the same profits today. Today, before Gigafactory and Berlin have ramped. Before they have ramped.
Wow.
When they have ramped, Toyota is going to need to make 10 times more cars than Tesla to get the same net profits. That's freaking insane.
And do you think that's purely due to their vertical integration, that they can keep the cost so low, and also the premium that's placed on a very strong brand? Why do you think Tesla can maintain such strong margins? And how do you see them looking? Would they still be the Apple of 2030?
There was a recent brand report that shows that brand affinity report, where Tesla is now the world's number 2 on brand affinity, just after Disney. Is Disney number 1? Tesla number 2? Apple's number 3. And I'm a Tesla investor. I love Apple as well. You see all my products, all Apple. So I can say that about Apple. So pricing power, no problem. In fact, Tesla has raised their prices. People complain, Tesla raised their prices like 10 times in the past 2.5 years. Yet, if you try to order a Model Y in most countries, 6 to 9 months waiting time. Sometimes in US, you want to order the Model Y long range or standard range, 1 year waiting time. You get your car in 2023. So pricing power is strong. And then this is just the core car business, which is the selling the car itself. Now let's talk about adjacent parts of the car business. Today, if you look at their Q1 2022 earnings, their services revenue is still negative. Barely zero. It's been negative for a long time, but it's hitting that zero mark. So most people think, Tesla services, shit lah. Look at where it's heading. I can guarantee you by the end of this year, it's going to be one of the highest margin services business in the industry. Why? Tesla insurance is one. Forget about full self-driving. Even if you're totally skeptical, you don't believe in that, what they're selling today is Tesla insurance. It's basically auto insurance. But the way that Tesla does it is, they've got all the telemetrics data in your car. They have your sensors, your 8 cameras, and it's first-party data. It's Tesla giving Tesla data. 2 million cars on the road. They've already now are selling in about 8 to 10 states in the US. The take-up rate, from what I hear, is more than 50%. So you think about it, if let's say you have all-state car insurance, you're paying $300 a month, you take up Tesla insurance, and they give you $100 a month. It will be very strange to not buy Tesla insurance, especially if the savings is anywhere, even if it's 20% savings, even if it goes from $300 to $250 a month, you're going to buy Tesla insurance. But for many people, the savings are 2 to 3x. It's like what the Godfather says, they make you an offer you can't refuse. How do they make this so good? Tesla has this system called safety score, right? That incentivizes good driving. And you don't have a good safety score, you cannot get full self-driving beta next time. You will not be cool. There's a joke among the Tesla community. Before you date me, show me your safety score. Anything less than 90, get out of here. It's a joke, but you can see how that incentivizes safer driving behavior.
The proprietary data and the telemetrics that they are gathering allows them to have margins better than traditional insurance companies, basically. That's what you're saying.
They gamify, they give you almost like a currency or reputation system. People talk about each other about their safety score. You don't want like a 67 safety score. People will be wondering, what's wrong with this person? I don't want to sit in your car. One day, Ubers, Grabs, you'll probably see if it's a Tesla picking you up, what's the person's safety score. Because a high safety score would be a good incentive, right? Like, I'll pay a premium for someone with a above 90 safety score. I feel safer.
Right.
The safety of my loved one is priceless. So that's Tesla insurance, which is available now. It's scaling up to more states in the US. It's only like 8 to 10 states. US has, I think, about 50 states. It's going to scale to Canada, to Europe, to other countries. It's pure margin. So Tesla insurance is almost pure margin. Even if you factor in all the recovery costs, and we know that EVs are really generally safer than non-EVs because they don't have an internal combustion engine. They can do external combustion in an accident. So this prices out a lot of car insurance companies out of the business.
Right.
And I think that more car companies will actually introduce their own version of Tesla insurance, like Ford insurance, GM insurance, Baidu insurance one day. Because it's just so compelling, it's profitable, and it's great value for the users.
Right.
You basically cut out the third party.
Yeah, I see.
So that's Tesla insurance. For full self-driving, a lot of people say, oh, the take rate is really bad. Actually, in Asia Pacific, it's single digit. Most people who buy a Tesla in Asia Pacific, they don't really buy full self-driving because they think it's a myth or it's not good value for money. So that perception is rightly earned. But if you try full self-driving or full self-driving beta in the US, it's a lot more confident, a lot more competent. So even if you just take US as one market to grow that first, if you assume there's zero progress in full self-driving, that's fine. You get a good car company, good services margin. If it happens, and Tesla and Elon has been very relentless, the two things keep up in his mind is getting Starship to launch, full self-driving. And when someone like him says he wants to do something, you tend to be on the wrong side of history if you bet against Elon. Even if it doesn't come out this year, maybe even if it comes out 10 years from now.
Yeah.
Even if it comes out 10 years from now.
I agree with you. Actually, so what he says, I believe will happen. It's just the timeline.
Yeah.
So it's like when you do your valuation, you need to give yourself that margin of safety. Whether do you think you're going to hit the target, your return on investment by 2030 or is it 2040? So that's something, I guess, whether you're a small-time investor or big-time investor, both you have to consider when is your exit strategy, basically.
So you can price something, if you're not as familiar with Tesla, I recommend you pricing full self-driving as your bull case, like all things happen right. If you're a normal investor, just price as if it's a normal car company. And even then, it's quite significant. They're right now 1% of the global car market, 1%. They have ambitions to grow to 20%. Let's say they only achieve half that goal, 10% of the entire car industry. If the business 10x, can the stock at least 3 to 5x? That's fair, right?
Right.
And that's assuming a normal car company without the services revenue.
Okay.
The rest, the robots, the AI, the energy business, you can assume they're science fiction. But at least this company has science fiction to talk about. You go to other car companies, what are they talking about? We're going to build a better truck. We're going to build a better SUV. We're going to build a better hatchback.
Business as usual.
So it comes back to your earlier point, right? Like, yes, Tesla has the installed base right now to train the machine learning. But the other big difference that people don't talk about is the ability to attract talent. So if let's say you're a data engineer today, Ford offers you a job, Tesla offers you a job. The other car company would have to pay you a 30-50% premium for you to seriously consider them. You go to most engineering schools in Singapore, in Japan, in Austin, in London. They're going to want to work for Tesla or SpaceX.
That's true.
And great talent attracts great talent. People who are hungry, and people who are hungry and given autonomy. People say Tesla is very messy all over the place, but that's what young talent loves.
Yeah.
We want messy all over the place. Yeah. We don't want a rule book with these 20 steps to do.
Exactly. So you can make a change. You can go in, you can make a real difference is what young talent want to do. And of course, the stock options is always very attractive of like a company that you can see 10xing in your lifetime. So I agree with you. The ability for Tesla to steal talent from other companies is one of the advantages I see. Going back to like valuation again, because I have to harp on this point since I'm obsessed with it. I use free cash flow for my valuation for Tesla, and I see that their capital expenditure is quite significant, right? Because the cost of ramping up production is actually very expensive. Do you see this cost coming to a plateau between 5 to 10 years? And so they can use existing gigafactories and continue ramping up? Or do they need to continue pumping in so much capital expenditure to fuel this growth? So it's like growth, but at what cost? Do you need to borrow to grow? Do you need to spend billions every year to grow?
So there's this perception that high growth companies would have high capital expenditure, high capex. But if you map out the capex of Tesla relative to every other car company, mature ones like Volkswagen, or Toyota or startups like Rivian and Lucid, you will see that Tesla's capital expenditure is actually similar or lower than most of them, which is insane.
Right.
A Gigafactory costs about, I think, $1-2 billion. And every year, a Gigafactory can make, let's say, 500 million cars. 500 million cars at average selling price of about 60,000 USD. Of course, the first 9 to 12 months, not much because they're ramping up, right? Ramping is very hard. But most Gigafactories can pay itself off within 2, maximum 3 years. And there was another stat I saw recently on operating expenses. Tesla's operating expenses is lower than Rivian. Lower than Rivian. With revenue that's 375 times higher than Rivian. Again, these are all annual reports. You can find these numbers there.
Okay.
Tesla is extremely frugal. They're very bare bones on things. And Elon actually says, I think our capex and opex are still too high. We can reduce it. But remember that these capex and opex are still being spent on white space projects. Very few other car companies are thinking robo-taxi, a lot are thinking robo-taxis, especially Chinese EVs, to be fair. But very few of them are thinking AI and robotics and energy or mining. You won't be surprised in the next few months, you hear Tesla buying mines. Because raw materials are everything. Elon's going to release the Tesla Master Plan Part 3. And the big theme of it is extreme scale. So extreme scale means, he said recently in some interviews last week, you got to think planet-wide resources and not like site-wide resources. Like, how do you allocate the planet's resource for batteries? And here's another thing to consider. As time passes, as there are more EVs installed base and as EVs expire or depreciate, batteries can be recycled. 99% of the battery material can be recycled. All the aluminium and steel in ICE cars can be recycled to make EVs. And costs of recycling are far less than mining new material. In the Tesla 2021 impact report, they were saying that 2020 impact report, they're saying that if you recycle the batteries or other raw materials, the cost will probably be half or just 30% of what is it to get new ones.
What's the recycling nowadays? So like if you were to turn in your Tesla to trade in for a new one, do they receive back most 99%, like you said, of the materials back into Tesla? How does it work now?
For the batteries, yes. For the rest of the car, it's a certain number. But the install base right now for EVs are still very small. So that one will take about 3 to 5 years to play out. There are 2 million Teslas right now. And most of the Teslas in the road have been produced in the past 3 years. So it'll take some time to play out.
Nice. Okay, I have one last risk factor to talk about with Tesla, which is the elephant in the room, Elon Musk himself. So, like you said, Tesla is very ambitious as a company. They are talking about things that look like science fiction today. If Elon Musk were to quit, or for some reason something happens to him, do you see a potential replacement that can actually steer the company in the right direction so that they can still maintain their vision?
I'll share an analogy with everyone. When you go to a Michelin star restaurant, do you care who's in the kitchen, or do you care what the food tastes like, the quality of the food? So Elon is like a chef, and the rest of the leadership team can be like a cook. A chef will create the recipe, the cook just have to follow the recipe.
Right.
And a Michelin star restaurant can have a chef who's left already, but the cook still continue adhering to the recipe. Even if it's 10-20% diluted, it's still pretty epic food.
Right.
Another example would be Apple. Right? Steve Jobs was the visionary of the time. He left, he passed in 2011. Tim Cook took over. For the 10 years since Tim Cook took over, Tim Cook could say he was an amazing cook to Steve Jobs, who was a chef. And this cook grew the stock price 14x.
Right.
14 times increase. People thought when Steve Jobs left, the stock already grew 35 times in the past 15 years, 35 times. And they were like, this company is tapped out. If you sold Apple then, it'd feel pretty sad. Yeah.
I see. So you have full trust that Elon is able to attract someone that can be that cook and take over, follow the instructions, understand the instructions in the first place, because I don't think the instructions would be simple based on your analogy, and sort of be the Tim Cook if something were to happen. So in that sense, you feel that the risk is not too great for an investment.
The risks have been very, very high back in 2017 when they're going through production hell. They're trying to produce the Model 3 and they were weeks away from bankruptcy. If Elon wasn't there,
I remember
goodbye Tesla. Right now, this is the world's most profitable car company. If you run Kodak or Nokia at its worst days, you've got to screw up really badly to still not milk that cash cow. The cash cow is a
Right.
cash cow, right? No matter how
Yeah.
poorly run a company could be, it will
Right.
still run for years or even decades before it closed down. So in SpaceX, like they've got Gwynne Shotwell, the COO, very strong operator. She would be a natural successor to SpaceX. For Tesla, people will be wondering, who's that person? I see it right now, one of the candidates would be Zach Kirkhorn, the CFO. If you notice for Tesla, right, there are only two people who are given custom titles. Elon Musk is Techno King. Zach Kirkhorn, the CFO, is Master of Coin.
I did not know that.
He's
Interesting.
also got a degree in engineering. So he's not just finance. Yes, he's got a Harvard MBA, which Elon says he'll hire you in spite of your MBA, not because of your MBA. But he's got an engineering background. And you look at the earnings call, Zach Kirkhorn is actually able to talk about the engineering topics in a more quite savvy way as well. He doesn't just go free cash flow, interest, stock buybacks and all of that. So I think he's at least a good potential candidate. I think what's really underrated is because Elon shines so much, the other good talent in Tesla are not yet recognized. In fact, it's almost dismissed. It's almost like if Elon's not there, whole company close shop. Or in Singapore, we say it's up, right? Goodbye. I think that's pretty extreme thinking. The reality is probably somewhere in the middle.
Right.
It's going to be very hard to find the next Elon Musk. Like a Steve Jobs doesn't take over from a Steve Jobs, and Elon Musk is not going to take over from Elon Musk. But I think you're going to have someone pretty competent.
Cool. Thanks so much for talking through the details of like why Tesla is a potentially great investment. We'll take a short break and then come back with Daren. Hey, welcome back. In the first part of our interview, you went through Tesla's valuation, competition, and potential moonshots. In this part, I'm going to talk to Daren about the general markets, so stay tuned. Daren, what are some growth stocks that are on your horizon right now? So let's say someone says, as an investor, your job in life is to like find 10 great companies. So let's say you want to find 10 great Teslas.
Yeah.
What's your approach to looking for such companies? And can you share with us, like, what are some on the horizon?
I'll reframe this to begin with the end in mind. Like, what's the ultimate objective? Which is better than inflation returns, high returns. So there are many ways to achieve that. One way is you just buy the S&P ETF and have chill for the rest of your life. You'll be generally okay, according to history, about 9 to 10, 11% returns year on year. Or you can pick stocks. So I'm clearly picking stocks because my portfolio is very concentrated. It's not diversified. And so far, I haven't found many companies with the same risk-reward ratio of Tesla. But one could be because I'm very biased because most of my stocks are Tesla right now. And maybe I just haven't done enough research on other companies that will give the kind of returns that Tesla can give. The other way I think about it is, so my way of investing is very different because I spend so much time every day on Tesla. I talk to employees, I talk to owners, I talk to investors. And so my level of conviction on Tesla is very abnormal. It's very, very different.
Right.
I have no problem if Tesla stock price is $600 right now as well. I don't have a problem if the stock price is $2,000 right now, I will not sell. So my conviction is very different. And I'm investing in a belief. So for me, I invest in Tesla mostly as a growth stock. I invest in Apple, not as a growth stock, but as almost like my bond or my savings account. Apple's my savings account that beats inflation. Other people in Tesla community, they also invest in companies like Palantir. They think that it's got strong potential. Others invest in Chinese EVs, or some invest in other American EV companies. That's what I've seen generally for people who invest in Tesla. Actually, a majority of people who invest in Tesla tends to have, once they feel they have high enough conviction, about 60 to 80% of the portfolio is Tesla. If we do like time and time again, multiple people have done multiple surveys and polls on Twitter and everywhere else. People who invest in Tesla tend to be quite concentrated on Tesla. People who don't invest in Tesla, they won't put in like 5% of Tesla. It's very weird.
I see.
Yeah, I haven't come across people who have 5% in Tesla or 10% in Tesla. Very rare.
Yeah.
There will always be good companies out there. Others will say, crypto gives much better returns. If you look at Bitcoin, just stable coins and Bitcoins, over 5 years, 35x returns. That beats Tesla. So Tesla is not going to give us the highest possible returns, but it's probably going to give one of the best risk-reward ratio for return. If you're looking for great returns, I think about crypto.
Right.
or if you have very high conviction in early stage startups. And I'm not sure what they are. Some people think it's like Joby Aviation, like those flying companies or drone companies. Or some people think they're like the genomics companies. What if you solve cancer one day? That's going to be worth like 100,000 export. That's priceless.
Right.
So I don't have a good answer beyond Tesla right now for growth stock actually.
Right. Actually, this reminds me of something called like the barbell strategy, right? So you have one side that's considered extremely high risk and high reward, and then on the other side you have more things that are extremely safe, and you only invest in those two and nothing in the middle. So that's one thing that I found interesting, and it reminds me. So when you say Tesla is like you have extremely high conviction, and you see Apple as more like a savings bond. That's like the two extremes, right? You say Tesla's your moonshot, 90% in, and then Apple's like emergency. Like you have something to fall back on.
It's a foundation. Like if Tesla goes to zero, let's say it goes to zero. Okay, like a meteorite hits every Tesla Gigafactory and Elon decides to join Lucid, for instance. Like I can still live a very, very simple life with my Apple.
Right. I see. That's an interesting way to calculate it. So I guess knowing your comfort level, what's the minimum amount for you to stay invested? Because like the thing about investing is that people get discouraged, right? So I see that, maybe you try for a few years, which is actually very short in terms of time horizon. You get disappointed because you keep losing money, and you get very frustrated every time you see the notification on your phone, the negative returns, and you give up. So to me, actually, that's the biggest danger. So if you're starting out investing, actually what you need is patience. And to do that, you might need certain things set up. Like you say that I'll never allocate more than this amount. You make sure you weight your convictions. This is a very strong conviction, but I will never go beyond 95% of my money in, that kind of thing.
Yes.
So you have to consider what is that percentage for you, and it's based on your current lifestyle, maybe your future lifestyle as well, and your career. Like what's the input into your investments you can do every month. So one other thing on the cover is that on your channel trailer, right, the first thing in the description says the best time to invest is 10 years ago, and the second best time is now. In today's geopolitically unstable climate, right, what advice can you give investors? Should they be thinking the same way as they did, let's say 5 years ago, 10 years ago, compared to today?
We can take Warren Buffett's saying, when people are fearful, be greedy. When they are greedy, be fearful. Right now, fear index generally quite high. So you've got money that you don't need in the short term. You're not borrowing money. You can afford to lose it if it goes to zero. I think this is a decent time to invest.
Do you think the fear over things like US-China tension, the Ukraine war, like macroeconomics or even like global events, it's a fear that's justified more today compared to our previous year, or do you think it's just like history repeating itself? Like it's the same thing during World War II, the same thing during the Cold War, things like that, when there's panic and people just generally are afraid. Therefore, stocks go down, valuations just naturally go down, and they shift their assets to, I don't know, gold or some other kind of safety haven. Where do you see that playing out, do you think, for the next, let's say, 5 years?
If you don't want to think too much about it, just buy S&P 500 ETF, close your eye for 30 years. If you want to do a little bit of research, think about it, what we talked about earlier, see beyond what people are seeing, beyond the wall, peer and see what's next. After most wars is a period of economic boom. After most wars is a period of reconstruction and boom. And even right now, if you walk to Orchard Road, you go to Orchard Ion, the queues for the shops, for Tiffany and Co, for these fancy stores, pretty substantial. The rich get richer. Unfortunately, the poor sometimes get poorer. The people who lose millions can afford to lose millions. The people who lose hundreds, they usually can't afford to lose hundreds.
Right.
That's their food, that's their bills, that's their rent, that's their school fees.
Right.
And if you look at the stock prices of many luxury companies, like Hermes, it's doing quite well.
Yeah.
You would think that all these companies would be dying. No, it's doing quite well. There are long wait times for Rolex. They are sold out in most countries. Use first principles thinking. Don't reason by what people say or conventional wisdom or just what you hear in media. Do your own fundamental research. All of you are probably an expert in some areas because maybe it's through your job, or it's what your family does, or you grew up with people with a certain level of expertise. Do your own fundamental research. You will generally find if you're an expert in something and you watch media coverage of it, there's a lot of misunderstanding.
Yeah.
Or some people call it fear, uncertainty, and doubt.
Yeah.
Because a lot of news media people are, through no fault of themselves, they are generalists. So they just see the very surface things out there.
I see it's like because the analysts have to cover so many different, like let's say you are a sector specialist, you still have so many companies to cover, right? So sometimes they don't have the time to go as deep as you might as an individual investor to go, okay, I'm obsessed about this company. What is their economic mode? How do I see them? How do I see them in 10 years? And why is this a good investment? Like an analyst might not be able to give you that. They might have to give like a 1 year, 2 year kind of projection. And 1 to 2 years is probably not long enough for you to see real returns after inflation. And if you're lucky enough to be able to make a decent income, you can always do both. You can invest in, I guess, the S&P 500 as well as like start building a position in your favorite companies as well. And that's for the fortunate ones where we can do this. The fact that you are thinking about investment right now, see it as you are blessed, you should do it, and invest in the companies you believe in, and don't throw away the opportunity over like some hype stock for no reason other than I want to make it rich in a few short months.
The other thing to talk about here is mindset. Actually, people who are experts in industry don't always give better returns. If you look at most hedge funds, they do worse performance at S&P 500 if you just buy an ETF. And there was a recent Netflix film, because I'm a big Elon Musk fan, I watched Return to Space. It's a 2-hour film about their first crewed launch on the Crew Dragon. When NASA was trying to work with them, a lot of industry experts say it can't be done, this is stupid, this is silly, you should just bring back the space shuttle or whatnot. Even all of Elon's heroes and champions, like all the astronauts who went to the moon, they went to Congress and said, this is a bad idea. These are all experts in the field, like they've been to the moon, they know what they're doing, they're saying. Right. And yet they doubted SpaceX. SpaceX was a totally new company, but they made it happen, as you all know now. They put people in the space station. I think so far, the track record of Crew Dragon, they put more Americans in the space station in recent years than any other spacecraft. The point of saying this is, many of us who are new investors, we may think, oh, all the experts, all the institutional investors, they will sure be better when we will get conned. We don't know what we're doing. But that's a feeling, that's not a statement of truth. That's not a fact. As Elon says, physics is the law, everything else is a recommendation. If you have a feeling, research it. Prove or disprove that feeling.
Yeah.
Try it out. Why don't you try investing $100 and see what happens? Maybe you'll beat the experts. There are articles that say monkeys beat the experts, goldfish beat the experts, octopus beats the expert. You're smarter than an octopus. Give yourself some credit. And if you're wrong, you're wrong. That's fine. There's more to life than money. And as Tommy said, we want to get rich fast. Why do you want to get rich fast? You're living 30, 40, 50 years. What's the rush? If we give you $10 million today, what are you going to do with it? Are you going to stop eating your favorite chai fan? We are very impatient for money, but we don't think about the consequences of money. If we give Tommy $100 million right now, his life may be more miserable. We've seen this happen to people who won the lotteries as well. It's not always a good thing to have all the money you want now. You want a foundation to make sure you can pay the bills and all of that. But the difference in life between having $1 million and $100 million isn't that significant. So ask yourself, why are you in a rush for money? Is that something that you're trying to run away from? That's my view. That's
great, Daren. I also want to point out that I think people like to chase these very high returns because they go, there's smart money and there's dumb money. First of all, that's probably a false statement. There's no such thing as smart money and dumb money. Everybody has their own investment thesis and own sort of mindset. So when they go, I have a very small capital allocation. I only have a few $100 to start with. So I need 10,000% return in 1 year, not 15%, not market beating returns. That's a very dangerous mindset to have because the impatience can cost you more time down the road. So every loss you make, you have to recuperate it, and so something that goes down 50%, right? You need to 2x your money now just to make it back. And so you might take even more risk. So to me, that's the danger. You go into leverage and other derivatives simply because you want to cover back something that you lost, or you feel that, I started investing late compared to my peers, so now I'm in a hurry to catch up. So I think that's one thing I noticed is like a very dangerous mindset to have. And I would encourage people to take a step back and sort of say to yourself, where do I want to be? What can I put aside every month? What sacrifices do I have to make in my lifestyle so that I can reach that goal? And that's like a lot more useful to you and sustainable in the long term compared to like just trying to hit it big. Because if you want to go do that, you have the lottery for that, and statistics will just be against you all the time. So have a think about like where you want to be in that scenario.
And remember why you invested in the first place. You didn't start investing to beat Tommy. If let's say Tommy buys Alibaba, I hold Tesla, 10 years later his returns is 10x, mine is 5x. I'm happy for him, I'm happy for myself. You're not there to beat anyone, you're just there to achieve your own financial objectives. Focus on that. Remember why you started.
Yeah. I think that's a very healthy mindset to have. Just you compete with yourself. You're always trying to beat your best self. So you just get better and better. And this way you don't get so distracted by the media. This is probably not great for YouTubers to say, right? But actually you should take everything with a pinch of salt and not necessarily consume everything and follow everything. So sometimes a very filtered view of the world is actually more helpful. And so find out what you want to achieve and what is it you need to get there. And yeah, just happy investing. And I hope that everyone finds this interview helpful and get something out of it. And Daren, thank you so much for your time. I really appreciate your insights and your sharing your experiences.
Thanks for having me, Tommy. Remember to click the like button and hit subscribe for Tommy.
And Daren's channel as well. Yeah.
It's not easy to start a YouTube channel. It's a very lonely journey in the beginning. If you see a 30-minute video, there's probably 10 hours or 20 hours of effort that went behind it. Especially in the beginning. Someone so new to editing a video, marketing a video, finding the right conversations to have, it's very, very hard.
Yeah. Thanks everyone.
Bye-bye.